the end of another busy trading week, so let's find out the most important macro events of the week. Wrapping things up, I'm joined by Ipek Ozkardeskaya, market analyst with London Capital Group. So Ipek, let's start off and look at earlier this week when the Bank of Japan kept monetary policy on hold, despite the economy entering a technical recession. The Bank of Japan argued the recovery is on track. Are they right to remain so optimistic?
Well, we shall talk about a mere optimism here, as the Chinese slowdown has an impact, and we have seen this week a slump of 3.6% in exports to China. On the other hand, the falling commodity and energy prices are an important drag before the BOJ's inflation target of 2%, if ever it gets there. So with the slowdown in Asia continuing, I think that Japanese economy is not going to be very much diverging positively. So this is a developing story, and that's going to be a problem for the Bank of Japan. And I think that they are very much aware of the difficult times and the economic challenges ahead. So this being said, for the time being, the Bank of Japan has little reason to add more stimulus, as each unorthodox move takes away some flexibility for a future action. So we are already talking about the fact that the pool of Japan government bonds is drying, and countries' major pension funds, as the GPIF, has already shifted allocation from domestic government bonds to stocks, and the other pension funds are known to be doing so. And this portfolio reallocation liberated a certain amount of government bonds for the BOJ purchases, yet this cannot continue infinitely, and we do not know how long the bond buying will be needed in Japan. And in this context, we may well see the BOJ refraining from action and act unexpectedly, as they love to do it, to grant a maximum impact in the market.
Today, Mario Draghi spoke, saying that the European Central Bank will do what's necessary to ensure that inflation returns towards the goal of just under 2%. Do you think an expansion to the €1.1 trillion QE program started earlier in this year is needed?
So we all heard Draghi saying ECB will do what it must do to raise inflation, and quickly. In this rhetoric, we certainly think about both an expansion in size and in time of the current quantitative easing program, but it seems like the conviction for deeper negative deposit rates is also growing. At this stage of the game, we do not have any more details than this. It is like a well-wrapped gift that has been delicately placed under the Christmas tree. We can take any guess on it, but nobody really knows what the package actually contains.
Aside from what we've spoken on, what event this week do you think will have the biggest long-term impact on the markets?
So I believe the most important macro event of the week has certainly been the brand new idea of dovish hike from the Fed. This is the beginning of a new phase for pricing the divergences in monetary policies. The timing of the first rate hike lost of its importance this week. The first rate hike will certainly happen in December. The market is prepared for it, but nobody will be pricing anything more than this. We will certainly see a very soft tightening path, however, from the Fed, and this is what is gaining importance right now. In this respect, we could see some shift in market positioning, given that the divergence is to be watched and to be priced across the curve now, and this is going to be a major change in the way we compare the existing monetary policies walking into 2016. It's not about spot actions, but we will have to enlarge our vision in time and see how these divergences will be priced across the curve, and not only at a particular moment when the first rate hike is going to happen. So this is giving a positioning in the market which is quite different than what we have seen until this week, and this is why we see some mixed reaction in the US dollar, but we also see some heavy squeeze in the US dollar. So from next week, we should see some more stabilization in the US dollar. But once again, the way that we will be looking at the monetary policies will be drastically changed with this new idea of watching the path of the monetary policies rather than the single actions to come.
And with that, our weekly wrap-up comes to an end. Thanks for tuning in, and remember to click back on Monday. For now though, have a great weekend.